Technical analysis. It's an important part of trading options. And using technical analysis, you're just using past market data and the trends to determine the probable direction of future price movements. And when you do this, you can make decisions about when to buy or sell your options contracts. And also, certain market conditions will require a certain type of strategy. You would use a different option strategy with a strongly trending underlying compared to an asset that is range bound. So what's technical analysis? Nice and simple, just involves studying historical movements to identify patterns and the trends, and we can use that to determine the potential of future price movements. We can use line charts, bar charts, candlestick charts, and indicators such as moving averages, the RSI, stochastics, and these are just mathematical formulas to help you analyze the data. There is no magic with any trading indicator, but it is helpful to help you identify patterns and trends in the market. They can help you identify entry points, places to put your protective stops, and your potential price targets. It can also be used as a tool to help you decide when to close out a profitable trade or cut your losses on the losing trades. So when you combine these tools with observations and research, you can gain insight into the direction of market prices. Now, trading options using technical analysis, it's going to require some research, observations, and using different indicators. And here's some steps that you could take when you're trading options and you're using a technical analysis approach. So the first one, before you execute any trade, it's really important to do your research on the stock that you're interested in trading. Now, some traders will use the fundamentals and the financial position of the stock, the company. Other traders, they believe that all the data is baked into the current stock price, and the chart tells you everything that you need to know. But whatever approach you use, you have to ensure that you do it consistently before every trade that you take. And one simple approach is just to observe long-term trend lines to help you identify potential resistance or support levels where that stock may find support or resistance, and trading within those ranges. We can use indicators to help identify support and resistance levels and the potential direction of price. Now, there's different indicators like RSI or the MACD. They can be used to help identify these levels, and these are the levels which price could break out or consolidate. And identifying these points ahead of time, they can help you formulate strategies that are more likely to be successful. And we're going to get into an example in a second. So you want to choose the right strategy. So if your expected price movement is a strong directional movement up or down, you can consider buying calls or puts. If you're expecting small moves or some sideways action, you can look at selling credit spreads. A directional move and you have some price targets, you could buy debit spreads. When selecting an options contract, it's really important to consider both the strike price and the expiration date. Selecting contracts with appropriate strike prices and expiration dates based on your research is going to give you an edge when you enter into these trades as opposed to just guessing. Here's an example. So let's imagine that the company Baker Hughes is on our watch list and we have a few technical clues. So we know the price is in an uptrend, and right now it was involved in a pullback on our trading time frame. The moving average have caught up to price, and we see that price is whipping around the averages. When you see that, it's showing that we are in a consolidation. We can easily then find support and resistance levels with the price. So we notice we have a flat top, relatively equal highs, forming a resistance level. At the same time, price is making higher lows into resistance, and we believe this is a bullish sign. We also consider the volume, and we note that the volume has decreased while price is forming this range. That's a good thing. We can also see that price has room to run to the upside before hitting potential resistance. So for simplicity's sake, let's imagine we expect a strong move up in the next few days. We base that on very low volume and recent price action failing to move much lower. Now, if we're considering a small move or even just a continued range bound, we'd look at selling credit spreads. So we decide to buy an in-the-money call option using the $28 strike price, expiration of 23 days. So imagine that we get filled at the mid price of the bid and ask price, or $1.55. So to enter this using one contract would cost us $155. But if we were to purchase the 100 shares that we would get in an options contract, that would cost us $2,865. So we need price to surpass our strike price plus the premium, or $29.55 for us to make money on this trade. Now, once all these factors have been considered, it's really important that we execute our trade based on strategies that we grounded in technical analysis and principles like risk management or hedging strategies designed for a specific scenario, such as a bearish or bullish market. So knowing how to best manage our risk before executing our trades is going to give us an edge, especially when price starts to behave unexpectedly. So using technical analysis is really huge help for you to determine the evolution of price in the underlying instrument by having the probability of one thing happening over another, you can then position yourself with some basic strategies, including just buying calls and puts. And whether you use technical indicators like the MACD or moving averages or simple trend lines and chart patterns, having a set method is vital. And as you progress in your options trading, you're going to want to learn a lesson from Mike and branch out into other strategies and improve your bottom line. We also have a free ebook you could download and you can learn how to trade 2 high-performing markets. It's our one-day options trading strategy. It's simple, but it's effective, and you can use it to make money in any condition. It's a free download, like I said. Download your copy. It's in the description below or off to the left here. Thanks for watching.